Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look at the Forex market. So yesterday we've got the CPI report. It was higher than actually the consensus poll suggests, a bit higher. But the problem was also that the method of the calculation has changed. So if previously in the CPI it was based on calculation of consumption in the previous couple of years, in the recent this new report for January actually is based on calculation on the consumption only for 1 year. And even with this new calculation, the numbers have become a bit stronger. There are also a few other important things in this new report. We definitely will take a look at it in the weekend. That also makes more clear the price behavior that you see currently, because at the first glance nothing actually suggests some increasing of the dollar value, and it's probably not many things has changed, but in fact the changes are significant and mostly based on the method of the calculation and also some other things that stand behind the CPI numbers. Now we have the retail sales on the horizon. It's also could bring a lot of volatility on the market, and you could see what the performance currently we have. It seems that, well, first I thought that all this madness with the balloons in the United States, UFO and some other stuff, it's some geopolitical tricks. I thought that probably United States could use this for changing the geopolitical situation in Ukraine to provide more help, provide some stronger weapon or something of that sort. But now it more and more becoming evident that probably the government used this stuff just to switch the attention of the people out from the problems that actually is becoming evident in the economy. It's very, very difficult keeping hiding them as they're coming on the surface. I will show you in today in the Telegram that the credit default spread of the United States has jumped recently significantly, and that's coming on the background of the revision of the recent CPI numbers, revision of the retail sales. So situation is withdrawing of the petroleum reserves. All this stuff really plays the really bad role currently in the economy and for the Joe Biden administration. Somehow to take attention out of this from the population, from the household, they start doing something with this all stuff, the balloons, shooting down the UFOs and so on. So now I'm start thinking that probably this is more probable than some relation to the geopolitical situation, but we will see. Anyway, we have two big reports ahead: retail sales and the PPI I would say even more important, so we will see. Meantime, on the technical side, what we see actually the slightly higher the pullback that we have thought about and we discussed, why we said last week not take the short position, wait for a bit stronger pullback, now is done. And situation become more and more clear. So currently we have the particular pattern to watch for on euro currency, and we easily should identify whether we will get deeper upward bounce or we will get the direct downside breakout. Currently, the more probable, based on the performance of the market, that we see downside continuation. And from that standpoint, it seems that weekly bread and butter trade currently is becoming more probable compared to the double repo, because it seems that market is still tending lower. So speaking on the Great British Pound, so yesterday we talked about this catalyst triple to sell. You can see it has worked, started nicely from the level that we have discussed. And that's the pattern that we have. So if you take in the position, you could probably move stops to the break even and see what will happen. And on the euro currency currently also is getting some more clarity. Recall our suggestion of the possible head and shoulders pattern. Now this pattern is coming to the last stage. So somewhere around 106.80 area we should control for the performance. If market fails to reverse up, start upward action, coming close to the bottom, it means that breakout will fall and we will get downside continuation. From that standpoint, hardly market will stop right there, just because it also will be the breakout of the confluence, and usually this is the strong psychological impulse as well. So from that standpoint, next level that we will be watching for is 104.80, 105.30, it's daily oversold, and next 618 support. And that will be not just the 618 support, this will be also the confluence support, because on the weekly chart you could see we have 104.60, 30% support area, and that's particularly the level that we intend to watch for a brand body trade. Just to remind you what we talked about in the weekend. On the hourly chart, you could see some bearish signs, guys. Why I still think that it might be, well, chances on the failure of the hand shoulders currently looks significant. First of all, on the recent CPI report, market has formed huge high wave pattern, as you can see. But later and right now, it has been broken down. So it means that market is choosing the direction. Current price stands at the 107.11 FIB support, but here is, I think, more important, the COP target. It's 106.86. That agrees with the lows of the left arm, and that's also non-duopoly minor FIB level, 786 FIB level, right there. It also agrees with this level. This is typical level for head and shoulders if it has 127 ratio instead of the typical 1618 ratio. And that's particularly what we intend to keep an eye on. If you would like to take the long position, that's also the level somewhere between 106.86, 107, where you could think about taking the long position. That will be optimal from the perspective of the risk reward. And then we will make the conclusion what to do next. Currently we are watching for market response on this area, completion of the COP, and what will happen next, and then we will decide whether it makes sense to take the long position here or not. The second moment where I think that's a chance on the probable failure of this pattern significant is that, well, here we have some acceleration, so here is relatively strong downside action. This also might be the sign of that bears are too strong on the point, on the area where actually bulls should take control over the pattern. That's also that I do not like too much. But in general, well, it is not forbidden. This is just an indirect science, relative science. But head and shoulders in general looks nice, and if you take the bet and will please stop the minor risk in 20-25 pips, I do not see that will be some strategy. It's trying to take the part with these head and shoulders. Besides, we do not know what retail sales will be. So let's keep watching and see what will happen.